Time for markets now, and like many of you watching, this week's analyst has been monitoring the weather, current planting conditions, and news on the latest market facilitation program payment. I was joined by Central Valley Ag's Luke Beckman on Thursday morning.
The payment is not going to be tied to the bushel, and there has not been a dollar per bushel announcement for either corn or soybeans or wheat or anything. It is a per acre by county rate payment. And the important thing I think that we read in there is that it's attached to your aggregate plantings for 2019. So prevent plant acres, as we're reading it, would not qualify. That's the important thing I think as we read that. The market didn't have a strong conviction as of right now which way it wanted to react. But what I think this does, and again it's early, is if you're in the Eastern Corn Belt or in South Dakota and there's a lot of acres to plant, you now have another option on what to do where maybe the shine on prevent plant gets taken away because you have a potential payment coming as long as you get something planted in 2019.
So Luke, the USDA is saying that this new round of payments is being designed to avoid skewing planting decisions. Is that what you're seeing?
Yes and no. What we saw yesterday from the private industry on the headlines was that we were going to see $2 a bushel on beans, 4 cents on corn. Those per bushel payments definitely would have skewed planting decisions. I can see that it would skew planting decisions a little bit, not necessarily between commodity because we don't know that there's any difference between corn and soybeans, but between prevent plant, do I plant or do I not plant? I think this creates an incentive to make sure we get those acres planted.
What do you think the initial reaction from farmers is with this news?
Probably the same as our reaction, and that's a lot of questions. The details were pretty ambiguous in there. It sounds like the first round of payments comes late summer, once we know what the acreage totals are, by the middle of July, and then depending on market conditions, we could see a second and third payment later this year. So the USDA left themselves plenty of wiggle room, just based on the article that we read this morning.
So how is this round of aid different than last year's?
Well, last year's aid was tied to production. So if you were a producer that went 100% corn a year ago, you missed out on the $1.65 that the USDA ultimately paid out, and got your penny per bushel on corn. This year, it is reading that it is not tied to the commodity. It's more just on planted acreage, in your county. They also said that your planted acreage for the program purposes cannot exceed what you planted in 2018. So as I read that, there's going to be producers that maybe acquired some additional acres this year. Those acres are not going to qualify for the payment, as we read the information today.
And I wanted to talk about prevent planting. From what we know now, you have to plant something in order to get payments, these MFP payments. So what are your recommendations for someone who is thinking about prevent planting, especially in light of the MFP news?
It's so hard to say because we don't have a concrete dollar figure tied to what that program might look like. We do know that the USDA is allocating more money than they were a year ago in terms of billions of dollars for MFP 2.0. So you would maybe anticipate that there would be a similar amount of dollars available on a per acre basis. But as far as what that dollar figure is, you don't know. I think the third item in this equation, and probably more relevant as we think about the areas to the east that don't have acres planted or in South Dakota, they need corn prices probably in the 430, 450 would make that decision easy to forego prevent plant and make sure that they get corn planted. These higher prices have created that incentive to make sure that we get the acres seeded to corn if they can do that. So between the MFP 2.0 and prevent plant, I think that farmers are going to be inclined to make sure they get acres planted, especially with corn prices rising. I think they want to take advantage of that, and farmers are an ambitious group of people and think that we could see prices continue to rise, so they don't want to miss out on that opportunity.
Okay, giving us lots of good advice so far. Major takeaway of what we need to be watching for over the next few weeks, couple months?
Well, I think weather is still in the driver's seat. We're going into a 3-day holiday weekend. The weather forecast Monday night is going to be huge. If it confirms that we stay wet, I think we'll be higher coming in Tuesday morning. what you're seeing is a lot of the strength is in 19 and 20 corn. As you look out to the 2020 crop, you'll notice that DEES 20 futures are roughly the same price as DEES 19. The market perceives the risk to be in the 19 crop. One thing we're doing with these higher prices is we are hurting demand. And longer term, that's going to keep a lid on things. So farmers should be looking at 2020 opportunities as well. There's some creative ways that you can hedge that risk, but don't forget about the 2020 opportunities for corn. Soybeans, they remain tough all the way around.